Namaste, welcome to Arthaniti, where we discuss money and money related instruments to help you in your everyday investment decision making. My name is Dr. Shefalika Gokhale. I hold a PhD in business practices of mutual fund houses. In continuation with the previous video where we discussed banking sector and its prospects from investment point of view, in today's video we will see about how various big investors in the country think about this sector. Do they think that this sector is worth investing? What are their views in wake of the oncoming Lok Sabha elections? Who better to start with than the legendary Rakesh Jhunjhunwala? Rakesh Jhunjhunwala, who was often called as the Warren Buffett of India, was very bullish on the financial sector in the country. Rather, he was always bullish on India herself, right? He said that if India had to have a robust economic development, it will always be with the support of a strong banking and financial sector. So he was quite bullish about this industry. He had invested in banking stocks like Federal Bank and Canara Bank. And after he passed away, his wife Rekha Jhunjhunwala still holds these stocks in her portfolio. To quote Rakesh Jhunjhunwala verbatim, in August of 2022, just a few days before his death, he had said, PSU Banks, and PSU Banks is all he was very bullish on. The reason that he gave behind the statement of his was he expected with economic rise in economic activity, the credit will rise, which will have a positive impact on the pricing power of these banks. Plus, he also said that PSU banks were a magnet when it came to gathering deposits. One of the basic reasons for this is the sovereign guarantee that these banks have to offer to depositors. Talking about PSU Sector, Prashant Jain, the fund manager extraordinaire, the former chief investment officer of HDFC Mutual Fund, always was bullish on the PSU sector. His views were previous to the pandemic, where investments were always in hotshot sectors like IT and pharma, which always overshadowed the PSU stocks. As a result, the PSU stocks were always undervalued. Post pandemic, he says, is a golden opportunity for investment, especially in the PSU banking stocks. Why? Because he says that the PE ratio of these stocks is attractive enough, which will help achieve long term gains if invested in the right stocks. A little side note, when I spoke about the views of Prashant Jain and where he quoted that PSU stocks were undervalued and their PE ratio was low, what exactly is PE ratio? Well, PE ratio is price to earning ratio. It is the relationship between the share price of a company to the earnings per share. Now, how are earnings per share calculated? The total income that the company has earned divided by the outstanding number of shares that the company has issued. So, a higher PE ratio means that the company is either overvalued or investors have a bullish view about the future of the company. Maybe the company is in a high growth industry and people are willing to pay more looking at prospective future earnings, right? Consequently, what is a low PE ratio? It means that the stock is undervalued or the company is in a matured industry with slow growth prospects. Many industry veterans like Manish Chaudhary and Sandeep Pandey also have a bullish view about banking sector. Chaudhary is of the view that before the elections, when the government is pushing on capital outlays to increase the infrastructure in the country, banking sector is going to strengthen at the back of the strengthening economy that we are all witnessing. Sandeep Pandey is of the view that he is bullish on industry veterans like ICICI and Axis Bank. Why? Because he says that they are institutions of established reputation and a track record of success. How can one forget HDFC Bank? Well, all of us have seen that after the merger of HDFC with HDFC Bank, the stock has seen some correction, uh, maybe due to the lowering of the interest margins that they are expecting that the bank would achieve following the merger, rise in NPAs after the merger. But these are initial days, and only time will tell how this merger will pan out in the future. A Morgan Stanley research note says that capex has emerged as a key growth driver in India after a decade of steady decline in the invest to GDP ratio. What this means is, with the capex cycle reviving, banks, which are a proxy to any economic growth in a country, yeah, will see a revival as well. Why? Because any capital inflow into the various sectors of the economy happen through banks, be it private sector or public sector, right? Be it individual loans or corporate loans. All capital inflow into the economy happen through banks. To quote a few points from a report of White Oak Capital, the report says that BFSI, banking and financial services industry, is one of the fastest growing industries in the Indian economy. It states that from March 2004 till September 2023, so around 18 and a half years, Nifty Financial Services TRI stands for Total Return Index, which generally means a collection of the price movements plus capital gains or losses plus any dividend that the security has declared. So it gives a more realistic view of the returns that your stocks can have. So the financial services, Nifty Financial Services TRI, grew at 17.6% in the period March 2004 till September 2023. In relation to Nifty 50 TRI grew at 14.6%. So the financial services TRI has outperformed Nifty from March 2004. Some of the interesting points that this report says that banking and financial services sector functions as a blood, keeping all organs healthy and supplying them with adequate oxygen and nutrients. Quite an interesting analogy. The BFSI sector represents the health of the entire economy. As such, it replicates the growth in the economy. Just like when there is a abnormality in our body, a blood work shows that abnormality. BFSI reflects any abnormality in the economy by way of NPAs. Again, a very interesting analogy that the report has used. The report also says that this sector is currently available at an attractive valuation compared to other sectors in the economy. Again, it is under the purview of regulators like SEBI and RBI, and therefore, with a strong network of what can we say, rules and regulations, this report is under this sector, I'm sorry, is in good hands. The last and most important point that this report suggests is it has underperformed Nifty. So this sector has underperformed, Bank Nifty has underperformed Nifty index in the last 4 years. This has happened only for the second time after the global financial crisis, which happened in 2008. So what this report basically says is it is a good opportunity to start investing in banking stocks at this point of time. Well, before we end, let us make it super clear that the idea of presenting this video was not an investment advice. We do not solicit investment in any specific stock. This video was purely for information purposes, and it gave you all the divergent viewpoints about experts in the investment field, what reports have suggested, and which field looks lucrative in the coming days for investing. Always look at these investments not for short term gains but from a long term investment point of view. Before ending, let me reiterate this. Please do your own research, contact your investment advisor, and invest after you are thoroughly convinced about the prospects of a particular investment. I hope you have liked this video. Please hit the like button, subscribe to my channel, and share this video for people who are interested in investing. I post a video every Monday and Friday. If you have any questions regarding today's video, please feel free to comment below this video and I will be happy to help you. Until next time, stay safe. Goodbye.